Hey Derek, how's it going today?
Hey, good, Drew. How are you?
Good. We are going to talk today about a common question that comes up with our clients searching for long-term care insurance, and that is if you're a USAA member, what options are available to you? What's your take on this?
Yeah, there's millions of men and women out there who've been in the armed services. So obviously, you have the USAA insurance financial resource program to your advantage, and they do offer a long-term care plan, and it's usually, I think it's limited to one to two companies, but you do get a 5% discount if I recall. Um,
Yep.
if
So
you
it's in most states it's John Hancock as far as I can tell, and
Yeah, I think you're right, and
5% discount. So it's not USAA backed long-term care per se. I mean, it's underwritten and sold by John Hancock, but USAA members get a 5% discount. Now,
so they're basically just acting as the insurance agency and reselling a Hancock product.
as far as I can tell, that's right. They're basically just kind of like a broker for just that one company. And that would be the first thing I would say is if you're a USAA member, you want to look at quotes not just from John Hancock, but from everybody because there may be a better deal out there.
Yeah, yeah. Specifically for in this case, because Hancock of the past 2 years, they just quite frankly have not been competitive price wise. I mean, I've run comparisons where they were, 50% higher than the lowest price company. So
Well, Hancock also doesn't have some of the more popular inflation protection options like a 3% or a 4% compound. You
yeah,
can't get. So what I've noticed is the USAA crowd because a lot of times they'll bring quotes to us and we'll compare. They're being shown this CPI inflation protection.
yeah, and a lot of the agents I think that offer the USAA, this is just my opinion based on the plan design, that they don't know what they're doing as far as explaining the CPI, or they're just omitting some key details. Specifically on the CPI, is if you have a negative CPI like we had in 2007 to 2009, any negative periods the previous year when you have a positive growth rate, you have to make up that negative year. So if it's negative 1% return, the CPI is negative 1% in year one, year two it's 3%. Your net for those 2 years is 2%. Whereas,
Well, humans have a tendency. I think it's just innate in our nature to we see a trend and we expect it to continue forever. This is what creates the yo-yo in the stock market because everybody jumps in, it keeps going, and then everybody
right,
jumps out at the same time. Right now, and where I'm going with this is right now, CPI has been positive for the last couple of years here in 2014. But if we get into another recession, which I mean, let's face it, it's going to happen eventually. There's a good chance CPI goes negative again. Then you're going to be not only you're treading water, you don't go down, but then once it starts building again as the economy strengthens, you're still treading water. You're not going anywhere because you're making up for that.
yeah. Another aspect of the CPI that I'm not thrilled with is because they the government, for whatever reason, the past few years, I think they've been keeping wanting to keep that number artificially low, and so they'll when they're computing that basket of goods they use to compute the CPI, they exclude food and energy. And anybody who goes to Costco, they know that a cart of food at Costco costs twice as much as it did 10 years ago. So, but those factors, food and energy, just trickle down to all our whole economy. So the CPI number they're giving you, it might not actually reflect what's the true cost of care is, how it's rising in the economy. So that's why getting a guaranteed interest rate, in my opinion, is the best route. And if you do go with USAA, I would strongly advise you that you look at the 5% compound with Hancock, because Hancock does have a 5% guaranteed growth rate. You'll pay for it, but at least you can plan and know the exact dollar amount that you'll have down the road.
So that's interesting about the CPI. What John Hancock uses is CPI-U. It's
Yeah.
not just core CPI. So I didn't know that they exclude food and energy because I mean those are the highest growing goods.
Yeah, I mean, and that's what when you hear the CPI on CNBC or Fox Business, when they announce what it was for the previous month, that's I think that's what they're using, the factor that excludes food and energy. And you know everything. every price revolves around energy because whether it's a good or service, you have to ship it there by tractor trailer, which needs fuel. So that's going to trickle down to the price of that good. That's why I think it's somewhat unreflective of the true cost of stuff out there. So anyway, not to get into a CPI debate because it's kind of
Yeah.
boring. It's
Well, but
just
if you're a USAA shopper and you're looking at it, you're probably being shown that CPI option. In my experience, and by the way, while we're talking about agent experience, I don't think I've ever seen anybody do the comparison with the whole market of companies like we offer at LTC Tree. Choose a USAA plan because that 5% discount is not making up for the higher cost they're seeing elsewhere.
yeah, like I said, often Hancock, when you especially run the 5% compound, they're 50% higher than the lowest price company. So you take 5% off of 50, you're still 45% higher than the lowest price company. So I mean, as a rule, the past 2 years, Hancock just has not been competitive price-wise in most cases. Now, there are some cases where they are competitive, or Hancock's a great company. Maybe somebody wants to buy them just for their history. Then yeah, I mean it's a solid company. But just know that there could be more quality companies out there, or not more quality, just better price companies that are equal quality, in our opinion, to Hancock.
Right, and it's really easy to get those comparisons. There are tons of websites that appear to give you quotes online, but there's only one true company that's really going to just send you the quotes without a sales meeting, and that's LTC Tree. That's us.
Yeah, I mean, we're not going to give you some tired sales presentation at your kitchen table. We'll mail all this stuff to you, and you can look at it on your own time. And I always give the analogy, we're like umpires. We'll call the balls and strikes as they're pitched, give the positives and the negatives from each company, so you can judge for yourself which one you think is the best deal for you. Because there's two really big components that go into picking your company. Obviously, price is one. Another is the strength of the company, the financial ratings of the company. Those are the biggest two variables, in my opinion, when you want to select your company. We'll send you all that. We'll send you the prices from all the companies plus all the financial ratings of all the companies.
Right, and we work with, in most states, at least half a dozen or more companies. So we're, like in the quotes that I see going out of our office every day in the mail, almost I'd say 99% of them have at least the top 6 companies quotes in there. So, and we're able to look at the last comparison I did had 14 companies available that we could quote for the client. So if you want to see the whole market, we do a pretty good job of showing it.
Yeah, and we can also, a lot of military members obviously have they have the ability to buy the federal long-term care policy too. And we have the ability, we obviously can't sell the federal plan, but we have the ability to quote the federal plan's rates as well and compare them with what else is out there. And typically, if you have good health, you can get more benefits for less money going outside the federal plan even. But we can quote you what those rates are too, along with even companies that we aren't licensed to work with, we can still quote those as well.
Yeah, I got an email from you the other day said I just told her to go straight to the Fed plan because we know where their sweet spots are, and for some people you're going to be better off with the Fed plan, but for a lot of people you're not. I mean, again, we're going to call it as it is.
Yeah.
One final point, a good litmus test if you've already got an agent showing you some long-term care stuff is ask them about VA benefits because you're probably going to qualify for some VA benefits, and just see what their response is, because a true pro agent like we have at our company is going to be able to explain to you what you get and don't get from VA benefits.
Yeah, exactly. Yeah, a lot of people just forget if they go to the VA nursing home, they're going to a VA nursing home, and that's if given a choice, most people want to stay at home because the VA doesn't cover the home health care.
I'll leave you with just an anecdote. I mean, I can't. It's been a couple times, especially lately, where the wife wanted to buy the long-term care, but the husband, who was a veteran, said he didn't want it. So they're just going to dump him in the VA home and take what they can get, and then buy it for her.
Yeah. Well, that probably might not be a bad strategy because women tend to live longer than men. So.
Yeah, we've got a whole nother video on that. Okay, well, I think we've done a good job of covering the topic. If you're a USAA shopper, you got a lot of options, so check around.
Yep. All right. Thanks for your time, everybody. See you later.